Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today we're going to look at Amazon. They're doing two crazy things, share buybacks and 20-for-1 split. So we're going to look at if now's the time to buy to take advantage of that kind of split euphoria we've been seeing.
Yeah. If you guys enjoy this kind of entertaining stock market content of two stupid guys trading stocks, by all means, give it a like, subscribe below. We'd love to have you along in this little adventure.
Two Stupid Guys Trade Stocks.
All
All right.
right. Good old Papa Bezos there.
Papa Bezos. What do you think about this rocket here?
I mean, it looks like it's violating Mother Sky, if you ask me.
It's violating Mother Sky. I'll take that. Okay. All right, let's get into this. So, everyone knows Amazon approves a 20-for-1 stock split and a $10 billion share buyback takes effect June 3rd. Here's the part of the buyback that no one's appreciating. The $10 billion buyback is replacing a $5 billion buyback plan established in 2016, of which the company has purchased less than half of its target amount, and they didn't even start using it until last year. So they announced 5 billion in 2016, be like, yeah, no, we're gonna do it. Then they bought like 2 billion worth and said, well, now it's 10. They didn't even do the first five. Hmm. Okay.
Yeah, there's a little twist to this, too. I'll get to in a minute.
Ooh, perfect.
Oh,
Twisties. We're just gonna look at this very quickly. Previously, in the last year and a half ish, tech companies that have announced, like big tech companies, not everybody, big tech companies, for some reason, everyone thinks a split means more money. Um, it's not, but could be a way to make money. So Nvidia announces here stock split, 3 month timeline, 2.5 month timeline, 23% increase for the actual day it went in, right? Apple announced the stock increase, the stock split, gapped up an inappropriate amount. Doesn't make any sense. They weren't even that expensive to begin with, and then boom, goes through 43%. And Tesla, which is already crazy enough, announces, and all the Tesla people who are like, yeah, SpaceX is going to be the future of Tesla. Well, that's not the same company. Also, probably bought all this, and then boom, 62% increase.
yep. I mean, there is a practical application to stock splits. Allowing people to options trading is a lot more liquid when you do
Yeah,
stock split. That's for
for
sure.
sure.
Both Amazon and Google announcing their stock split means that they will be eligible to be added to the Dow Industrial Average. Which if you have an index fund that tracks the Dow, be forced to purchase more of both Google and Amazon
Yeah,
or purchase them. So yeah, there's useful aspect to it,
there
but
is.
overall moves to mostly euphoria.
62% worth, though?
Yeah. No, definitely not.
How about 43% in Apple? It's already like 2 trillion.
I know. Hey, I benefited from that one. What can I say?
I know. All right. Google announced theirs. The difference was the other three stock splits we went over were like 2 to 3 month timeline. Google is 6, and they announced it like last month, so it's too early to put stats on this one.
Yeah.
Is it worth it? Right now, you can look at this from two options: a swing trade, i.e., buy now, sell the day before the split, or should I just buy it now? Right. So this is the analyst ratings. Everyone says buy it, yada, yada, yada. We're going to
Yeah.
briefly look at financials. This is on a Vinny deep dive. This is we took two graphs. This is not a whole thing here. Okay.
Yeah.
Let me move your face. All right. So free cash flow. Do you like this chart, Vinny?
No, I don't like to see free cash flow going down. That's worrisome for a company for sure. Yeah.
It's definitely not ideal. Definitely not ideal.
Amazon is not optimized for free cash flow though. That's always what they say, and like that's the talking point, which is why it's hard to value through traditional kind of cash flow multiple methods.
Yeah, but in their earnings report, their goal is to optimize. So It's fine.
eventually.
Yeah.
Yeah. I mean, I'm sure they could, and they would be rather valuable at that point. It's a question of how valuable. You need to put actual concrete numbers on this, and you don't know it until you see it.
Yeah, that's true. I will say I only buy stuff on Amazon now. Like, they're pretty huge.
I would understand and agree with that.
Ebitda, Ebitda, Ebitda. Everyone says
Ebitda.
Ebitda, and they're getting rid of the T. I'm gonna start it new. It's Ebitda. Uh, so here is this is from Macro Trends, a great site. Here is like the last 20 quarters. You basically kind of want to EBITDA over 10. It's the goal. No.
Is that no? This is how many billions of it's a proxy of enterprise value earnings. So cash flow for the entire business is what EBITDA basically is.
What's the number you want?
There isn't like a number you want. You want to see the consistent growth.
Okay.
Yeah.
Well, Investopedia says 10.
Yeah.
That's fine.
Well, that's yeah. I don't know what that.
It's a subjective term. It's not.
Yeah.
Everyone has different numbers.
It's growing. It's but
it is
it's slowing
increasing,
down a little bit of growth.
But this was iffy.
Boomsies. Yeah. I mean, COVID boom. A lot of businesses that were e-commerce related saw similar trend, and now struggling with year-over-year comps.
But here's what I want to know, Vinny.
Would I buy Amazon, huh?
Now, this is a three-part question. It is A, would you attempt a swing trade on it for the possible, and history usually repeats itself, the possible increase right before the split? Would you go long on it, or would you stay away from both?
So I would not swing trade it as of yet. I would say that we should have it breaking out to new all-time highs before you would initiate a swing trade on this. Given the fact that Google had a quick pop and then immediately crashed back down to where they were pre-earnings. The market is very different now from where it was when the Apple and Tesla and Nvidia splits were going on. So I don't think it's acting the same.
That is accurate. Also, when you look at those graphs of like when Apple and Nvidia were going up, also everything was going up. So it's a little bit different. Let's see.
It's a lot more euphoria in the market.
A lot more euphoria.
So yeah, right now it's all fear driven. This right here is, if anyone's familiar with it, I think we have a lot of similar subscribers, but Everything Money, this is their software. We should actually do a separate video where we look at their software and kind of give our positives and negatives regarding their software. But I threw in my numbers here for Amazon evaluation. And if you kind of look down bottom there, we're looking at buy prices in the 1 to 1,500-ish kind of ballpark. Yeah, it's about half the price that Amazon's selling for today. Yeah. The other interesting point I wanted to highlight is they approved a $10 billion share repurchase. Do you know how much money in stock-based comp Amazon gave out last year?
Oh, you love stock-based comp. That's your favorite thing on the planet.
Yeah, I do. They gave out $14 billion in stock-based comp last year.
That's a lot.
Yep. Mm-hmm. Yeah.
It's good.
Exactly. Amount. Yeah, so that $10 billion share repurchase doesn't even begin to cover what they're giving out stock-based comp. Granted, Alibaba, same thing, right? They're doing share repurchases, but they're not even quite keeping up with stock-based comp. But their program's a little bit closer, a little bit more aggressive than this. So I think they're doing a better job of that. But Amazon's not even beginning to come close.
Ooh, there we go.
Yeah,
that's not good. That's a lot. I didn't realize they gave out that much in stock-based comp. I am going to swing trade this.
Okay.
Purely because I feel like, I'm going to wait 2 weeks. And me and Vinny were talking about this, but I think that we're going to get more clarity on what's going to happen with the Ukraine-Russia situation in the next 2 weeks. Because, I don't want to go into it, get political, but I'm going to give it 2 weeks.
That's okay. Understood. Yeah, I mean, you never know. The market could be very different, especially this week. We're expecting that Fed meeting, and then we're going to see our first interest rate hike, probably, or almost certainly. So how the market actually digests that once it happens could give us a little bit of a different direction.
I think that's why it's going to give it a decent buy point, because I think Amazon popped for no reason, right? Because they just announced a split. I think it's going to go back down to a little bit below where it was, kind of like Google did. But that's where I might hop in for maybe a long call, if you will.
Okay. Yeah. Maybe you could try call spread.
I'm sorry, call spread. A long call costs way too much money.
Yeah, there we go.
Yeah, call spread. All right, dudes. Let us know if you're going to take one of these trades.
All right, we'll see you in the next one.